NVIDIA is set for one of the biggest trading days of the year. A few hours from now could hand investors a $250 billion surprise. $260 billion, gone or gained before you finish your coffee. 3 numbers on the page decide which way the coin lands. Stick with me for 5 minutes and I'll show you what those numbers are, why Wall Street is locked in on them, and what the options market is already screaming. Right now, NVIDIA is valued at about $1.9 trillion. Options traders buying at-the-money calls and puts expiring Friday are betting on a 14% move. Run that math on 1.9 trillion, and you get about 260 billion. That's more than Disney and McDonald's combined, vaporized or created in a single night. If you own calls, puts, or just a tech-heavy 401k, this isn't just earnings. It's a wealth transfer. Consensus says NVIDIA will post $46 billion in revenue. But the whisper number on Wall Street is $47 billion. The entire delta is in data center sales. 2 years ago, that business was $3.8 billion. Now it's closing in on $39 billion. If the print comes even slightly below that whisper, it's a replay of January, down 8% after hours because guidance felt light. Beat by 2%, and every bull will scream that Blackwell production is running like a Falcon 9 launch sequence. Last quarter NVIDIA delivered 78.4% gross margin. The street wants 78.5, or else. Dip below 77.5, and the story shifts from we sell scarce pickaxes to we sell common shovels. Early B100 samples reportedly yield only 65%. If they're already at 70, margins stay plush. But miss, and suddenly AI chips start sounding a lot like DRAM in 2018. CFO Colette Kress has already floated $52 billion for the October quarter. Most traders see that as the floor, not the midpoint. The buy side is dreaming of $54 to $55 billion, an 18% sequential jump. Repeat 52, and the stock probably yawns. Lift it to 55, and the bull case turns into gospel. But if new export rules shave $5 billion off China revenue, get ready for gap-down fireworks. NVIDIA trades at 58 times forward earnings, the richest since the 2021 mania. The only thing keeping that valuation intact is a 40+% growth rate. Miss on any of the 3 numbers, revenue, margins, or guidance, and growth flattens, the multiple compresses, and a 2% revenue miss can become a 10% share drop before you can refresh your screen. Export caps already hit the high-end chips. NVIDIA's workaround is H20 and L20 compliant chips at lower prices. But every billion lost in China shaves about 3 cents off EPS. When you hear geopolitical headwinds, that phrase has preceded downside guidance in the last 3 quarters. Open interest on the weekly 175 calls and puts is exploding. Implied volatility above 110 is pricing in a move bigger than the 8% average over the past 2 years. The skew favors puts, which means even a modest beat could ignite a face-ripping squeeze higher. My live checklist is simple. First, the headline has to be record data center revenue. Second, listen for the word supply. If Jensen says supply constrained, bulls break out the champagne. If he says supply improving, bears hear margin pressure. Third, any hint about fiscal 2026. The street is modeling $180 billion in revenue. If Jensen casually says we can see a path to 200, the stock will re-rate before the call even ends. If this breakdown saved you an hour of research, hit subscribe. I'll have the instant reaction as soon as the numbers drop. Drop your revenue guess in the comments. Closest to the actual print gets bragging rights in the next video. In just 18 months, NVIDIA has added more market cap than Intel and AMD are worth combined. Tomorrow night decides if that rocket keeps climbing or finally runs out of fuel. 260 billion swings on exactly 3 numbers. Everything else is noise.